Eris Lifesciences has been seeing healthy gains post the announcement of acquisition of its Indian branded generic business of Strides Shasun in an all-cash acquisition. To discuss the contours of this deal, joining us on the phone line is Amit Bakshi, Chairman and Managing Director at Eris Lifesciences. Mr. Bakshi, good afternoon and thanks a lot for joining us today. Congratulations on this deal, and looks like the street may have given the thumbs up. The stock price is doing pretty well in today's session. I just want to check, how do you plan to turn around the domestic business of Strides, which I believe has been reeling under pressure?
Yeah, so look, when it comes to turning, it might not be a real case for a turnaround. It's real case to consolidate, because it has been reeling under pressure in terms of maybe not growing to its potential. But the brands are as good as franchisee as I love to call them. So it's just about consolidating these brands. In my mind, these brands have tremendous recall and they have been around for a long period of time, and also it has been representing the top players in their own market segment. So the work ahead of us is to really take this pan-India. Right now, there's a skew more towards south. It needs to move towards, across the country. Once that starts happening, the consolidation should start coming.
Okay. Mr. Bakshi, if you could tell us how long will this take, and what kind of investment would you really need to make?
So look, this is something which is core to our business. So, the acquired portfolio would sit across 4 divisions of ours, which are already existing. So what it does is basically, it adds up to the people who are already working. So, there's not much question about how much extra money it takes from that point of view.
Amit, good afternoon, Neeraj here. How would the funding be done? I would guess you would sufficiently fund it for the same.
Yeah, Neeraj, we have around more than 400 crores cash sitting in our book. So we just have to work, because what we earn out of treasury and what we think we should be paying for the loan doesn't make a difference actually. So it will be a mix of both cash as well as some debt. And
you wouldn't need to infuse any kind of new money. I think you kind of briefly answered that. Making it sure. You need not infuse fresh money into this in order to turn it around.
No, absolutely not.
Okay, fair call. Just at least one question from my end. If we just look at how your Q2 was, and now the fact that you have an added advantage in the second half of the year of these businesses as well, can we expect the second half to be stronger than what you've done in the first half?
So, Neeraj, let me make this point. We believe for the industry as a whole, the second half would be better than the first half on the whole. For us, because of this acquisition and even otherwise, it stands true maybe a bit more.
Mr. Bakshi, just a last question. Were you only looking at the Indian business of Strides, or were you also looking to acquire some pockets of the global business?
No, frankly, the global business of Strides is in such wonderful hands, and I think that they'll do pretty well there, and we have absolutely no bandwidth outside India. So this entire deal is for the country itself.
Frankly speaking, with the way global businesses are doing, Amit, I think it's better to be in the seat of an Indian business right now. So thanks so much for joining us today and speaking with us.